class 4, 5 or 6, it is now your turn to have a bite of the Joy Learning Cherry. Get ready for our all-new upper primary lessons here on Basic Classroom.
As I mentioned, my objects you check to find if you have that same object.
We promise an exciting and interactive TV classroom experience.
We have the stand,
Television,
a computer monitor.
With our proficient and intellectual TV teachers, no problems will be left unsolved.
The 4 that we have at the end will be represented on the ones.
We will take our time and take you through the curricula from beginning to end.
Look at very useful Joy Learning TV lessons.
Come on, grab your remote and tune into Joy Learning channel on Multi TV and subscribe to our YouTube channel at Joy Learning TV. Basic Classroom shows Monday to Friday at 4:30 p.m. with a repeat at 6 a.m.
News is better served when they are captured by the right lenses and aired on the most appropriate channels. We first came to you as Campus 360, but we are now Edu News 360 because we have evolved to become better and bigger, bringing you once a week educational news on Ghana's first educational channel, Joy Learning. Education helps us get exposure to new ideas and concepts that we can use to appreciate and improve the world around us and the world within us.
As a science student, I never relaxed, but I actually decided to cross and extend my boundaries.
We have explored many campuses, and indeed, many achievers have been celebrated. And it is time we delve deeper into more educational stories and project the success stories in the various schools. We will continue to capture and serve you stories from academics, sports, entertainment, and culture. Just know that Campus 360 is now Edu News 360. Let's journey through various schools and educational related events as we update you on happenings in our educational sector and celebrate the success stories and achievements on your favorite educational TV channel, Joy Learning. Edu News 360 shows every Saturday at 10 a.m. on Joy Learning.
Welcome to another joy and wonderful episode of the Joy Learning SHSR. Today on our revision show, we are going to learn something powerful that we have always been practicing in our homes and in our daily life. As you're preparing for your examination, we are going to look at how we can answer some of our WASI questions as our examiner expects from us. So sit comfortably at home, get your calculators as a business guru, get your jotters and your pens, and let us walk through this successfully as we learn something and go and face our paper with so much joy. Joy learning, we are going to learn with so much joy. Stay tuned. So on today, let's look at our objectives for the day. So we have our objectives. By the end of today's lesson, you should be able to define a cash budget. You should also be able to state the purpose for preparing cash budget. You should state the importance or advantages of a cash budget. You should also be able to state items of receipt and payment. Then you should also be able to prepare a functional budget and a cash budget. On our previous episode of our revision show, we looked at what budget was, the types, and then we started preparing the functional budget, which we said it is prepared by each department in an organization. We look at how we can prepare the sales budget, which will lead us in preparing the production budget. Once you are able to ascertain the number of units you want to sell in the period, you can ascertain the number of units you have to produce to meet the sales target. And then we look at how we can prepare the material purchase and usage budget, which is also dependent on our production budget. Once you know the number of units you want to produce, you can ascertain the materials you are going to use in producing the product. And then you go on to ascertain the number of materials you are going to purchase to meet your production target. Today on our show, we are going to look at another functional budget, which is the cash budget. And I know most of us prepare our budget before we leave our homes, as I mentioned on our last episode. What is a cash budget? I'm sure you always make a budget before you step out of your homes. So today we are going to see if we are making a mistake in preparing our budget, whether we have surpluses or deficits. So let's get rolling. It's going to be an interesting evening, and I promise you after our revision show today, you will enter the exams hall and then pass successfully. So what is cash budget? So cash budget is a detailed statement of receipts, which is the amount of money coming into your business, and then payment of cash during a budget period. A cash budget is a detailed statement of the receipts. We are looking at what are inflows. When we make sales, it means that money is coming into our business. And then payment of cash, it means when we purchase, money is going out of our firm. So we are making what? A payment. So cash budget is focused on looking at the receipt and then the payment of cash during a budget period. We have the total cash receipt and then the total cash payment, and then the balance are all analyzed into either month or weeks within the budget period. So that is a cash budget. We want to know our inflows and our outflows within a particular budget period, which can either be in weeks, in months, quarterly, or then annually prepared. Now let's look at some of the purpose of preparing a cash budget. The first one is to ensure that cash is always available to run the business and then pay debt as they fall due. Once you are into full operation of business, you have to make sure that there is money always available for you to run your business. Another purpose of preparing a cash budget is to secure enough working capital in advance to avoid shortage of funds. You cannot run your business without funds, so you always have to secure enough working capital, and that is why you need to prepare your budget. You also have to prepare budgets so that you ensure that money available is used judiciously. You don't just spend money anyhow in an organization. If not, there will be a deficit. You should know that the money coming in should be more than what is going out. So you make sure that you use the money available judiciously. Then it is also to determine whether there will be surplus cash for outside investment. Once you're operating your business, you don't need to spend all the money that comes into the business. You have to be able to invest so that you can recoup at a later date. We also have the importance of the cash budget. We have looked at the purpose. What is the importance of preparing a cash budget in an organization? The first one is that it reveals when an organization can run out of cash or go into a situation of cash crisis. So in an organization, you need to prepare your budget to know when you are going to run out of cash. You have made sales. Have your debtors paid? No. Once they've not paid, it means you are going to run out of cash. So you prepare your cash budget, and it serves as what? A tool to manage or check whether your organization is going to run out of cash or go into a cash trap. Also, it helps management to foresee the expansion possibilities of the firm. You started as a small business. Is the money coming in enough for you to expand your business? One importance of cash budget is to help management to foresee all these opportunities. It also shows the expected cash surplus or position of each of the periods ahead. We know that the closing stock of 1 month becomes the opening balance of the subsequent month. So this will show whether there are surpluses or there are what? Deficit or losses, as we all know. Another importance of cash budget is that it helps the operating expenses of the business to be controlled. Once you prepare your cash budget, you can determine whether the money going out is more than what is coming in. Am I making a lot of expenses? If I have 10,000 as a capital and my expenses are even already more than the 10,000, we need to prepare the budget to control such expenses. Then we can also say it enables the organization to assess whether its operation can continue as planned or not. So you have planned a 3-month budget. You have your inflows and your cash flows. Your cash budget will help you determine if you are going to achieve that target you have set within that 3 months. So that is another importance of preparing a cash budget. Now, before we can prepare our cash budget, we need to know some items of receipt and then some items of payments. We know that before we can know our net cash flow, we need to less our payment from our receipts. Some of us, when we enter the exam hall, we don't even know the items of receipts. Even the grouping sometimes become a problem. So you pay attention to what the receipt entails and what our payment also entails. Now, when we talk about receipts, we are looking at what brings money into our firm. When I sell an item, am I making money or not? When I pay rent, am I making money or I'm losing out money? This is what you should know. Whatever we do or we involve in that brings money into the business is an item of receipts. This is how we earn money into our business. And then if I'm taking money out of the organization coffers, it means what? I'm making payments. When I'm paying for rent, I'm paying for expenses, I'm paying for wages. They are all payment because what? Money is going out of the firm. So look at this scenario, and then when you enter the exam hall and you have a question on cash budget, you know how to tackle it. Before you can know the items of receipts, ask yourself, is it bringing money into the firm or money is going out of the organization? Then you can group the item under receipts or payments. So let's look at some of the items of receipts. Then you ask yourself, is it bringing money into the firm or not? So we have the first one as cash sales. For example, you go to Franco Enterprise and then they are selling their television. When you purchase and you pay outright, are you giving money into Franco or they are taking money out of their firm? It means money is coming into the business because they have made sales, you have paid outright. So we call it what? Cash sales. Immediately you bought the television, you paid outright. So they have received money into their firm. Now we have something we called receipt from debtors. That means they made the sales on credit. So the same scenario, you enter Franco Enterprise, you bought a TV, but this time round you didn't pay outright, but they gave you a time period to come and make the payment. So we are in the month of July, and then they ask you to pay in August, that is the month after July, meaning you are their debtors, they are expecting you to come and pay. And once you pay, it means what money is coming into the organization. So it's also an item of receipt. Then we have fees, royalties, and donations received. So you see fees, royalties, donations received. Once you are receiving, it means what something is coming into the organization. We are not making payment. So it's also bringing something into the firm. Then we have receipts of interest and dividends from investments. Once you have invested an amount at the bank, the interest on it come back to you as what? An income, an inflow. You are receiving it into your firm. So that is also an item of receipt. Then we have proceeds from sale of fixed assets. Once you make sales, it means what you are receiving the proceeds from the sales you made. So that is also an item of receipt. This is just a few of the items of receipts. Let's look at the items of payment. Now we can determine the items that will bring money into our firm. Now let's look at the items that will make us take money from the organization. We have cash payments. We order for goods from our suppliers. Immediately they supply the goods, we pay outright, meaning we have taken money from our coffers out of the firm. So money is going out of the firm. We are making what? Payments. So this means an item of what? Payment. Then we have cash paid to creditors. Just as cash received from debtors, this time around, it means we also purchase goods from suppliers on credit. And we have to pay at a later date, meaning money will still go out of the organization. So we group this item under item of payment. Then we have purchase of fixed asset. Under the receipt, we sold fixed assets. So money came into the organization. This time we are purchasing. So money is what? Once again, going out of the firm. So it's a payment item. Then we have loans prepaid. When you go for loans, you need to go and repay those loans that you have gone for. So once you are going to repay the loans, it means what? Another amount of money is going out of your coffers or the firm's coffers, meaning it's also an item of payment. Then we have payments of dividend, interest, and then tax. Once you are paying tax, if I'm earning 2,000 and I have to pay tax, an amount of money is going out of my coffers. So that is also what? Payment. We have rent, we can have wages, we can have expenses. Once we are making payment, anything we pay out of the organization coffers is an item of payment. So you take note, we have the item of receipt and then item of payment. I hope this is very clear. So when you meet a question, you look at it in this order, and I'm sure it will going to help you to prepare your cash budget. We look at how to prepare our cash budget. Some key points to note. The first one is it is advisable to prepare cash budgets to show cash flow by subtracting payment from receipts. It is always advised to prepare cash budget to show cash flow by subtracting the payment from receipts. So we have two major formats of preparing the cash budget. Either you begin with the opening balance or you begin with the receipts, but it's best advised when you start with the receipt so that you can subtract the payment from the receipt directly to ascertain your cash flow. Then for all months, you add the opening balance to the cash flow to arrive at the closing balance at the tail end of the cash budget. So the closing balance of 1 month becomes the opening balance of the subsequent month. Provision of bad debts and depreciation are not shown in the cash budget. So you take note. When you're preparing a cash budget and there is depreciation, you don't add it to your cash budget because they are what? Non-cash item and not a physical cash. So we don't add it to our cash budget preparation. Then we also have you prepare cash disbursement schedule for all months showing amounts of payment to be made to suppliers. So assuming that you took the goods from your supplier on credit, you need to prepare the cash disbursement schedule to show when you are supposed to make payment to the suppliers. You are also supposed to prepare cash collection schedule. Whether it is required or not, you need to prepare the cash collection schedule. So if there was sales on credit and then the question have stated when you are supposed to receive those monies, you need to prepare a cash collection schedule from your debtors. If they are supposed to pay the following month, you need to indicate that so that at the end you know the total amount you are receiving in a particular month. You are also supposed to prepare cash budget for only the periods the budget relates and not for all the month. So you may be given a question and they give you the sales for 6 months. But the question is asking you to prepare the budget for the first quarter of the year. Don't assume that because you have the sales figures for the 6 month, you are supposed to prepare the budget for the 6 months. Please stick to the question. It says prepare the budget for the first quarter of the year. So you have to just prepare the budget for just 3 months and not the 6 month. So you stick to that. Then the closing cash balance for 1 month becomes the opening balance for the next month in the cash budget. So the closing balance from December will automatically become the opening balance for December. Don't expect to see the opening balance for all the month you are supposed to prepare the budget for. So we have January to April, and then we've been given the opening balance for January. That is, it means the closing balance from December, which has become the opening balance for January. Don't expect to see the opening balance for February, opening balance for March, and then opening balance for April. The closing stock of January will become the opening balance for February. The closing balance for February will become the opening balance for March, and then the closing balance for March will also become the opening balance for April. So you take note. The closing balance for 1 month becomes the opening balance for the next month when we are preparing our cash budget. Total payments are always subtracted from the total receipts to ascertain the closing and opening cash balances. So we have our total receipts, we know our total payment, we subtract, then we have our net cash flow, we add our net cash flow to our opening balance, whether it's a surplus or a deficit, to then ascertain our closing balances. We subtract our payment from our receipts to ascertain the net cash flow. We add the opening balance to the net cash flow, and then we can ascertain the closing balance for that particular month. We also have sales less profit margin to give our purchases or cost of sales. So depending on your question, we always calculate sales on margin and then our markup on cost. So once we know our sales, we can change it to markup and then ascertain our purchases for the period. That is, if purchases are not given in your question, that is how you can ascertain your purchases, because the sales figure will have a profit figure in it. So we need to ascertain the profit figure and then subtract it from the sales to ascertain the purchase price. Now let's look at the format for preparing the cash budget. We are looking at the first quarter of the year. So we have the opening balance. We have an alternative format where we can start with the receipt. But this format is starting with the opening balance. But as we move on, when we are solving questions, we can go otherwise. So we have the opening balance, and then we add our item of receipts, and then we mention some of the receipt items. We said we have the cash sales. We also have the debtors. We have dividend. And then we also have the payment. We add the opening balance to the receipt, and then we less the item of payment from the total. That is our creditors. We can also have wages. We can have the expenses. So we add it up to ascertain the total payment, and then we have our closing balance, because we already have our opening balance at the top. Before we started with our opening balance here. So we add the opening balance and then the item of receipt. Now once we have done that, we only less our total payment from that, and that will give us our closing balance. If we are not going by this format, then it means we are starting with our receipt. So our opening balance will come down. We will start with the receipt, we less the payment to ascertain the net cash flow. Then we add the opening balance and ascertain the closing balance for the period. Once we are done, the closing balance of January will become the opening balance of February, and then the closing balance of February becomes the closing balance for March. So this is how the format of our cash budget will look like. Now we're going to take an illustration and then we will prepare the cash budget. So our first illustration, the questions will be on your screen for some time, and then we will walk through and prepare a cash budget for the organization. From the following data, prepare the cash budget of Juices Limited for the first quarter of 2022. From the following data, prepare the cash budget of Juices Limited for the first quarter of 2022. So you take note, the question is asking us to prepare the budget for the first quarter of 2022. Now the data. We have sales, purchases, wage, and then expenses. So for November 2021, we have sales as 90,000. I hope you are taking note of that. We have purchases of 55,000, wages of 10,000, and then expenses of 45,000. Then we have December 2021, sales is 80,000, purchases is 51,000, wage is 9,500, and then expenses also is 15,000. Then January 2022, we have 65,000 for sales, 40,000 for purchases, 6,000 for wage, and then 2,000 for expenses. February 2022, sales is 85,000, purchases 56,000, wages is 5,500, and then expenses is 1,600. March sales is 95,000, purchase is 60,000, wage is 7,000, and then expenses is 1,400. So this will be our data, which will be on your screen for just a moment. Then we continue with the other aspects of the question. We continue. So let's look at the additional information. Additional information I. The balance as at 31st December 2021 was 30,000. So we take note of our 30,000 here as the opening balance from 31st December 2021. The closing balance was 30,000. So we should know where we'll be taking this. As I said, the closing balance of the previous month becomes the opening of the subsequent month. Additional information 2. Sales are made on credit. And this is the interesting part you pay attention to very well. When you meet a cash budget in your examination, you are supposed to know how to prepare the cash budget, especially the timing of receipts from debtors. It is very important to know the timing of receipts from debtors and then payment to creditors as well. When you miss out on that, you are going to get your cash budget wrong. It means you have started the mistake from your receipt schedule. So you pay attention to the timing. Now the question says sales are made on credit. So once again, we went to Franco Enterprise and bought the fridge on credit. Now listen to what Franco Enterprise gave us. So it says that from past experience, it indicates that 60% of the sales are paid in the month of sales. Now, when we talk about month of sales, we are looking at the month in which the sales took place. So you take note of that. The month in which the sales took place. So our month of sales, let's take that we are in July. So the sales was made in July. So the month of sales is what? July. So if they are saying that past experience indicate that 60% of the sales are paid in the month of sales. So you take note of these two. 60% are paid in the month of sales. So per our question, it starts from November, meaning November is the month of sales. Now 20% in the month following sales. 20% in the month following sales. We are in July. You ask yourself, what is the month following sales? If we make sales in July, then the month following sales is what? August. So we are going to pay 60% in July, and then we pay what? 20% in August. Right? Good. Now, 20% in the month following sales. So when you make the sales, they assume that 100%, the amount that was incurred is 100%. So they have spread it across the month. So we have 60% in the month of sales, 20% in the month following sales, meaning we are left with what? 20% before we get to what? 100%. So we pay this 20% also in 2 months following sales. So they made sales, but it wasn't a cash sales. Cash sales means they paid outright. But because the sales was made on credit, we are supposed to pay 60%. So we are in July. You bought the thing 1st July. You are supposed to pay 60% at the end of July. Then you make payment of 20% in the month following July. Because the sales was made in July, July becomes the month of sales. You take note. Then we have another 20% being paid in 2 months following sales. So if the month of sales was July, then 2 months following July is what? September. But for our question, we are looking at what? January. So if the month of sales was January, then the month following January is what? February. Then 2 months following January will be March. So that is for the sales aspect. Now we look at additional information 3. It says creditors are paid during the month of supply. So with creditors, we don't have to prepare any schedule for the creditors. So here you take notes. We are paying our creditors in the month of supply. Right. Then wages and expenses are paid in the month in which they are incurred. So you take note, the same month in which they were incurred. I hope you are putting the main point down so that when we start, you can follow through. Wages and expenses are paid in the month in which they are incurred. Now, we look at our workings. So this is a schedule of cash collection from debtors. As I made mention, you have to look at the timing of receipts. The question have made mention that the sales was on credit. Don't forget that, and it has given you the timing at which we are supposed to receive the money from our debtors. Now, we look at the various months we are supposed to prepare the budgets for. Please, you know that accounting and costing, we look at the text. Don't forget the heading, and then you are supposed to state the month you are preparing the budget for. The question asks you to prepare for the first quarter. So the first quarter is just January, February, and then March. Now, you bring your CD sign as well. So we have November sales. Look at this. If November was the month of sales, it means in November, we paid 60% of the total 90,000. The month following November, which is December, we also paid 20%, right? Good. Now, what is 2 months following November? That is the first question you should ask yourself. So once you are preparing the schedule, we should know that there is an arrest somewhere that needs to be paid in January. That is from November sales. November sales totaled 90,000, as you can see on your screen here. And from this 90,000, 60% of the 90,000 was paid in November. That is what I've put in here. Then in December, we paid 20% of the November sales. Now we are left with how many percent? The question says 2 months following the month of sales. So if the month of sales was November, we have paid 60%. The month following November is December. We have also paid 20%. Now 2 months following November is what? January, of which we are supposed to pay another 20%, and this will give us the total 100%. So this 20% from November sales will be received in January. So on your screen, you can see 20% of the November sales being paid in January. Then we are done receiving the money from November sales. Is that clear? So that is the timing. Because the 2 months following November is January, we are now in 2022. Don't forget November was 2021. We are now in 2022. But 2 months following November is January. So the 20% will be received in January. So that gives us the 18,000 cedis. I hope that is clear. Good. Now let's look at our December sales. If November sales we had an arrears to be paid in January, then it means with December sales we have to receive an amount in January and then in February. So let's look at our December sales. So we have December sales. So meaning December is the month of sales, right? Great. So if December is the month of sales, it means in December we paid what? 60% of December sales. And then the month following December will be what? January, of which we are supposed to pay what? 20%. So we pay 20% of the December sales in January, which is the month following December. 2 months following December is February. So we once again pay the 20% also in February. So let's look at our December sales, how we are going to enter that. So we have the December sales, because we have already paid the 60%, which is the month of sales in 2021. We have already paid, or the organization has received 60% of the December sales. Now the month after December is January, of which they said we are supposed to pay 20% of the December sales in the month following December. And the month following December is what? January. So as you can see, December sales, we have 20% of the total December sales, which is 80,000, and we are receiving it in January. So that is why you are seeing the 16,000. And then 2 months following December is February. So once again, we pay another 20% here in February. That is from the December sales. So we have 20% to be received in January, and then another 20% also to be received in February, because the 2 months following December is February. Are we getting that? Great. So we move to the following month. We have May sales in November, we have May sales in December. Now let's look at our January sales. So we have January sales. Meaning January is the month of sale. Because January is the month of sale, we are supposed to pay 60% in January. Right? You made sales on credit, and they are saying pay 60% in the month of sale. The month of sale now is January. So we pay 60% in January. The total sales that was made in January was 65,000. Now, the 65,000 wasn't received in January. 60% of this 65,000 was received in January. So we are paying 60% of the 65,000 in January. Right. Now, the month following the month of sale. So when we talk about the month of sale, it is the month at which the sales took place. And it took place in January. Now, what is the month following January? February. And the clause says pay 20% in the month following sales. So if the month of sale is January, the month following the month of sale is what? February. And we are supposed to pay 20%. So let's do that. So we have 20% of the 65,000 being received in February. As you can see here, we have paid the 60% in January, which is the month of sale, and then 13,000, which is 20% of the total sales being made. Now, what is 2 months following January? So take your time and understand the timing. The month of sale is January. The month following the month of sale, which is January, the month of sale. The following month after January is what? February. 2 months following the month of sale. So you ask yourself, which one is the month of sale? If the month of sale is January, then 2 months following January is what? We have January, February, and then March. So 2 months following January is then March. So we are paying another 20% in March, which is 2 months following the month of sale. Now let's look at the entry. So we have 20% of the January sales being received also in March, as you can see on your screen. So now let's look at the next month's sales. We have February sales. We follow the same steps or routine. So we have February sales. So now the month of sale becomes what? February. You take note of that. Always when we are talking about a particular month sale, that month is the month of sale. So now we are looking at February sales. Now the clause once again says pay 80% in the month of sale, meaning at the end of February we are going to pay 60%. So in February we are supposed to pay what? 60%. This time we are not paying anything in January because we are done with January sales. We have received 60% of January sales and pay the arrears in the month following and 2 months following. We are done with February, so nothing will be paid or received in January. We are even done with January. So now we are looking at February sales. 60% will be received in February. So we enter that. So we have February sales 60%. So nothing will be received in January. We move straight to February and then pay the 51,000 to the organization. Now, what is the month following February? We have March. And we are paying what? 60% of the 85,000. That is the total sales made in February. So we have 20%. We have 20% of the total sales made in February. Now we enter that. So we have 20% of the February sales which will be received in March. Now what is 2 months following February? We have April. But the question didn't ask for us to prepare the budget to April, meaning we leave it here. This 20% will be received when they are preparing the next quarter budget. So don't force to put the 20% anywhere when you are preparing your cash budget. The question asks you to prepare the budget for the first 3 quarters of the year. So the 2 months following February is April. So this 20%, which will give us 17,000 also, will be received in April. But because our budget is limited to the first quarter, we leave that 17,000. When we are supposed to prepare the next quarter, we will receive this 17,000 in April. I hope that is clear. All right. So we look at March sales. So we have March sales, and now March become the month of sales. So in March, I'm sure where we've gotten to, you'll be able to tell how much we are supposed to receive in March. So we are supposed to receive what? 60% of March sales, which is the month of sale. So now we are focusing on March as the month of sale. We pay 60% of the sales we made in March. So we have the March sales 60%. Now you take note, the month following March is what? April, where we are supposed to make a payment of what? 20%. And this cannot be paid because our focus is what? On the first quarter, and then April is not part of the first quarter. So this will be received in the second quarter of the year. Then 2 months following March is what? We have May. And with that too, we are supposed to pay what? 20% of the March sales. So you realize that from November sales, we had to come and pay in January. That is the same thing happening here. March sales, the month following March, and then the 2 months following March, we cannot present it in our budget now, meaning we have to add it to the next budget preparation. That is the second quarter of the year. So with the March sales, you're only going to focus on the month of sales, that is the 60% that was received in March. Now, after this, we are supposed to sum it up to know the total amount we are receiving in each month. So we know that from November and December and January itself, there's an amount that we are receiving from those previous months. At the end of the day, in January, instead of the 39,000, because there were arrears from November and December, we add it up to know the total amount that we are supposed to receive in January. And then we also have to add it all up to know the amount we are receiving in February and then the amount we are receiving in March. Then we will take the total to our cash budget. So we have the total for January as 73,000, the total for February as 80,000, and then the total for March as 87,000. So when you are preparing your cash budget, you don't need to show all these workings. You just take the total, which is the 73,000 as the debtors figure, receipts from debtors at 73, and then 80,000 and 87,000 respectively. So with the workings, we move straight to prepare our cash budget. Now we have seen the timing of the receipts. Because the creditors were paid in the same months they received from the suppliers, we wouldn't have to prepare any payment schedule. So we move straight to the cash budget. So don't forget to state the organization you are preparing the budget for, the month you are preparing the budget for, that is the period or the duration, whether it's for a week, it's for a month or quarter, or annually. Then you state the month you are preparing the budget for. Alright, so we've been asked to prepare the budget for the first quarter. So we know the first quarter as well, January, February, and then March. Alright. Data collection schedule. And now we know how much we are receiving from our debtors. So you can state it as what? Receipt from debtors. Can put receipts up here. As I made mention that in the format, you can either start with the opening balance as I indicated in the format, or you start with your receipt and then you less your payment directly from it. So for our receipts, we have our debtors, which we just finished with the workings. So for January, we have 73,000. Good. Now we move to our payments. We need to finish January and then we move to February. Now we have our payments. Now under our payments we have creditors. So with the creditors we go straight. They said they were paid as the amount were what incurred. So we go to our creditors and we just enter for January. We have 40,000. Then we have our wages, which was also incurred in the same month. They were received in the same month. So we have 6,000. And then the expenses too was also paid in the same month as it was being incurred. So we have 2,000 from our question. Now we add it all to ascertain our total payment. That is the payments, creditors, wages, and then expenses per our question. That is all we have for payment. So we sum it up and that will give us our total payments for January. So that is 48,000 cedis for our payment. Now, what was the opening balance in our question? Remember we said 30,000 from December. So if the opening balance for December was 30,000, then that will become the opening balance for January. So we have opening balance for January. So we realize our receipts, our payment from our receipt to know our cash flow, that is 25,000, and then we add the opening balance of 30,000. And we add the two. We realize that our payment is lesser than what? Our receipt. So the cash inflow is a positive figure. Alright, so we add our opening balance to ascertain our closing balance. So we add the 25,000 and then our opening balance of 30,000, giving us what? A closing balance of 55,000. Now we move straight to February. What was the debtors figure? We have 80,000. Now we look at the payments and the creditors for February. We have 56,000. Since we didn't have to prepare any schedule, then our wages is also 5,500. Then expenses for February is 1,600. We sum it up to know our total payment. That is 63,100. We less our payments from our receipt once again. And the February, that is giving us 16,900. Now what is the opening balance for February? You can guess it right. As we made mention, the closing balance of one month becomes the opening balance of the subsequent month. So then if the closing balance of January was 55,000. Then what is our opening balance for February? That means the 55,000 from January becomes the opening balance for February. So we move the 55,000 to February as the opening balance. Now we add the inflow to the opening balance to ascertain our closing balance for February. And that will give us 71,900 as the closing balance for February. So we go to March. What was the debtors figure for March? We have 87,000. Sorry. Now we less our payment. We have a list of payment items. We have the creditors for March, which is 60,000. Now we enter the wages for March also as 7,000, and then expenses as 1,400. So once again we sum this up to give us the total payment for the period, which is 68,400. Now we have to less our payment from our receipt. So this is the only receipt items we have here. We are lessing this payment of 68,400 from our receipt to ascertain our inflow. So we have 16,600 as our cash inflow. Now once again, what will be the opening balance for March? If the closing balance for February is 71,900, then our opening balance for March will be the 71,900. So we just move this to March as what? The opening balance. Closing balance for February was 71,900. It becomes the opening balance for March. I hope you are paying attention. Good. So 71,900 becomes the opening balance for March, we add it to the inflow to ascertain the closing balance. So we add these two, that is the 18,600 and then the 71,900, giving us 90,500 as the closing balance. So if we are supposed to prepare the second quarter budget, the 90,500 will be the balance for April, the opening balance. So the balance as at 31st March was 90,500, and then if you are supposed to prepare for April, it will become the opening balance. I hope that is clear. Good. Now let's take another illustration, and as we keep solving, you know how they submit the questions, or they put the questions, right? Okay. So we will take our second illustration, but before that we will go for a quick break, and when we return, we will look at other ways of how our cash budget questions will be presented to us in the exam hall.
Are you in class 4, 5 or 6? It is now your turn to have a bite of the Joy Learning Cherry. Get ready for our all-new upper primary lessons here on Basic Classroom.
As I mentioned, my object to check to find if you have that same object.
We promise an exciting and interactive TV classroom experience.
We have the stand,
Television,
a computer monitor.
With our proficient and intellectual TV teachers, no problems will be left unsolved.
The 4 that we have at the end will be represented on the ones.
We will take our time and take you through the curricula from beginning to end.
We look at very useful Joy Learning TV lessons.
Come on, grab your remote and tune in to Joy Learning channel on Multi TV, and subscribe to our YouTube channel at Joy Learning TV. Basic Classroom shows Monday to Friday at 4:30 p.m. with a repeat at 6 a.m. Joy Learning, keep learning. Are you in class 4, 5 or 6? It is now your turn to have a bite of the Joy Learning Cherry. Get ready for our all-new upper primary lessons here on Basic Classroom.
As I mentioned, my object to check to find if you have that same object.
We promise an exciting and interactive TV classroom experience.
We have the stand,
Television,
a computer monitor.
With our proficient and intellectual TV teachers, no problems will be left unsolved.
The 4 that we have at the end will be represented on the ones.
We will take our time and take you through the curricula from beginning to end.
We look at very useful Joy Learning TV lessons.
Come on, grab your remote and tune in to Joy Learning channel on Multi TV, and subscribe to our YouTube channel at Joy Learning TV. Basic Classroom shows Monday to Friday at 4:30 p.m. with a repeat at 6 a.m. Joy Learning, keep learning.
News is better served when they are captured by the right lenses and aired on the most appropriate channels. We first came to you as Campus 360, but we are now Edu News 360 because we have evolved to become better and bigger, bringing you once a week educational news on Ghana's first educational channel, Joy Learning. Education helps us get exposure to new ideas and concepts that we can use to appreciate and improve the world around us and the world within us.
As a science student, I never relaxed, but I actually decided to cross and extend my boundaries.
We have explored many campuses, and indeed many achievers have been celebrated, and it is time we delve deeper into more educational stories and project the success stories in the various schools. We will continue to capture and serve you stories from academics, sports, entertainment, and culture. Just know that Campus 360 is now Edu News 360. Let's journey through various schools and educational related events as we update you on happenings in our educational sector and celebrate the success stories and achievements on your favorite educational TV channel, Joy Learning. Edu News 360 shows every Saturday at 10 a.m. on Joy Learning.
The idea of no or confusing road signs can be likened to driving schools in Ashanti are ready to battle for supremacy and the bragging rights as the best school in debate. Can St. Monica's Girls Senior High School defend the title? Or will any of the 15 schools including OWAS, Prempeh College, Yasantua Girls Senior High School, TIMAS, Fresby SHTS, Bompata, KNUST SHS, Sapa SHS and the like wrestle it from them? Make a date from Friday 17th June to Friday 15th July 2022 as you get thrilled to fierce and insightful arguments in the Love FM High School debate from senior high schools in Ashanti. Catch the action live on Facebook at LUV 99.5 FM, on radio on Love 99.5 FM, and on Joy Prime and Joy Learning on Monday to Friday at 2 p.m. each day at the Christian Service University College. This event is brought to you by your superstation Love 99.5 FM in collaboration with the Ashanti Regional SRC, the Ghana Education Service, and the Conference of Heads of Assisted Secondary Schools, CHAS.
Every day the learning process stops, you die. Think about it.
One thing that I believe is lifelong learning, because that's how we grow as individuals. And there's no better place to learn than our Joy Learning.
Now, Joy Learning is the most preferred channel when it comes to learning. They're the first ever to put out teachers teaching you, taking you through step by step, helping you understand the simple courses and simple things that sometimes you find hard in the classrooms.
I mean, for revision of notes for everything, Joy Learning got you sorted on that.
If there is any channel that is dedicated to the well-being and development and academic performance of students, it's the Joy Learning channel.
The impact is great. Everywhere you go, there's someone who knows Joy Learning.
I love Joy Learning.
Joy Learning channel has become part of our national lexicon when it comes to educational, transformational impartation in this country. And as collaborators, we will make sure that we will continue to do our bit to promote this wonderful experience.
It's the #1 learning channel in Ghana right now. I mean, they have a lot of fantastic, amazing programs tailored towards the betterment of, the knowledge of our students.
Joy Learning, keep on doing what people cannot do. Joy Learning, I give it up to you. Joy Learning, Joy Learning, all the best, no challenger.
I encourage you to keep watching Joy Learning, your #1 learning channel.
Joy Learning.
Keep learning! Joy Learning has given students around the world access to free content. I believe it's been 2 years of exciting learning on Joy Learning.
That is a recommendation that Joy Learning is good. Joy Learning does have the potential to help every boy, every girl quicken what they are learning.
I must say I have picked very relevant feedback from a lot of people who have been watching Joy Learning, and the experience for them has been great, especially those who just wrote their BEC in WASI. They say that this program came at the right time to support them in achieving their aim of executing the agenda to pass their examination.
I want to entreat all of you out there to watch Joy Learning, especially the students out there. You know why? Because we keep a promise and we give you best of content in terms of education.
In the Akan realm, we see that as entirety.
So, for you students out there, stay connected. Joy Learning.
Keep learning. these 2 years. Oh, how time flies. Today I have been a benefactor, and students in this country and beyond are also benefactors.
We appreciate even how you handle the inconveniences that came with the lockdown, with the COVID, even helping students to learn even in their homes. So with your 2 years anniversary, we say congrats and keep up the good work you are doing. We wish you success in the future, and I know that Ghanaians are expecting more from you.
It might sound very simple in a way, but Joyland has done a lot. And on this note, I would want to wish Joyland a happy 2-year anniversary.
The whole country is now into it. They are watching Joy Learning, they are learning. So I would only say that they should continue and they should work harder than before.
I hope that many more students will find it not just as an appendix, but as an integral part of their learning experiences.
Let's encourage our wards or our kids to watch Joy Learning so they learn something better, because day in, day out, new things are being taught.
For mathematics in particular, I look forward to the day when, because of Joy Learning and every other such intervention, mathematics would not be feared. It will be revered, respected, loved. I mean, the kind of subject that you don't run away from when you hear it, but you embrace it.
Joy Learning.
Joy Learning.
Joy Learning.
Joy Learning.
Joy Learning.
Joy Learning.
Hello student, please take note of the following changes to our timetable on Joy Learning. The revision show for SHS shows Monday to Friday at 7:30 p.m. with a repeat at 9:30 a.m. The revision show for JHS shows Monday to Friday at 6 p.m. with a repeat at 12:30 p.m. SHS 1 lesson shows Monday to Friday at 1:30 p.m. with a repeat at 7:30 a.m. SHS 2 lesson shows Monday to Friday at 2:30 p.m. with a repeat at 8:30 a.m. JHS 1 lesson shows Monday to Friday at 3:30 p.m. with a repeat at 6:30 a.m. And JHS 2 lesson shows Monday to Friday at 5 p.m. with a repeat at 11:30 a.m.
Welcome back from our break. I hope you are still enjoying and following our lesson for today. Before we went on the break, we look at how to prepare the cash budget for a firm. You will take a look at another question and you will see the diverse ways we can present cash budget question to you in your examination. So let's look at Luna's Enterprise. It's preparing a cash budget for their business for 2022. Sales forecast for the relevant period are as follows, and as usual, make sure you take note of the relevant points that you will need in your calculation. So let's look at the sales forecast for the period. So we have the month as December, January, February, March, and then April. Then we have the sales for the various months. So sales for December is 14,500. January is 16,800. February is 18,200. March is 20,000. And then April is 21,600. Let's look at additional information. Kindly put the details down as we leave the questions on your screens. All sales are on credit and cash is collected the next month. So you take note of that. All sales are on credit and cash is collected the next month. So you take note. The first thing you have to note is what? It is not a cash sales, is what? A credit sales on credit. And then cash is done what? Collected in the next month. So that is the first point to note. From our previous question, we were given some clauses: 60% in the month of sales, 20% in the following month, and then 20% 2 months. It goes on and on. But this time, we have just been told that the sales is on credit, but it is paid what? In the next month. So if we make sales in December and is on credit, we are going to receive it in what? January. That is what it means. You have to just know the timing. As I said, the timing of receipt and payment is very, very important when you're preparing your cash budget. So you take note. All sales are what? On credit. And then cash is collected the next month. All right. So let's look at the next one. They said the business receives rent of 2,000 per annum. The business receives rent of what? 2,000 per month. We can either pay rent or receive. So it means this time money is coming into our business. We are receiving the rent. So it becomes what? Item of receipt. You can meet a question that says rent paid. Once it's being paid, it means an amount of money is going out of our firm, and that becomes an item of payment. But this time we are receiving it. So it becomes what? A receipt item. So you take note of that. We are receiving what? Rent of 2,000 per month. And then we have purchases are 80% of sales revenue for each month. So you take note of this. It didn't give you the purchases direct, but we are going to calculate it on what? Our sales. We know the sales figure, and 80% of the sales is our purchase. So you take note. And then are paid for in the month before the sales. 80% of the sales is our purchase. But then how are we going to pay it? We are paying for it in the month before the month of sales. So January sales will calculate 80% of it, but it will be paid in what? The month before. That is December. We are going this way and not after. So the first one, we realized that most of the things were after the month of sales, but this time is what? Before the month of sales. So you take note of that very point. Then we have a dividend of 4,000 is expected to be received. So when we're looking at the items of receipts and payments, we look at the dividends that are being paid and the ones that we are receiving. But we are receiving, it becomes an item of receipt because we are receiving something into the business. And when we are paying, it means money is going out of the firm. So it becomes an item of payment. So that will be our question. I'll leave it on your screens for just some few minutes to put your details down, and then we will all solve the question together. You can also join us live on 0302 211 705. As you get the details of the question, you can also call in through
0302 211 706, 0302 211 705, or 0302 211 706. Just after this question, we will take our question of the day solution and we will see which of our students is taking in our prize for the night. So once you have your details, let's walk through our solution. So we will first have to look at the details. An asset valued at 20,000 will be sold at a loss of 2,000 in March. So we are going to sell an asset which is valued at 20,000 at a loss. So you take note of this, a loss of what? 2,000. You take note of that. Then we have wages and expenses as 5,000 and then 2,500 respectively, which are paid per month. So here we are doing what we are paying becomes an item of payment. Then cash on hand at 1st January 2022 is 8,500. So that becomes our opening balance for January. That is 8,500. You are required to prepare a cash budget for the first quarter of 2022. The budget should show the net cash flow, so you take note of this for each month. And that is why I always want students to start with the second alternative, that is the receipt less your payment, to ascertain your net cash flow. Then you add your opening balance to ascertain your closing balance. And this is WASSCE 2020 questions. So if you are able to go through this, then means you are on the path of passing your exams. Now let's look at the solution if you have your details down. So when we look at our question, we will have to prepare payment schedule, the cash collection schedule. You still have to prepare it, but because of time, I'll skip that. They just went straight that we are supposed to pay a month after the month of sales. So if the month of sales is January, then it means you are going to receive the money in February. That is for the cash collection from debtors. Now let's look at the cash payment to suppliers schedule. Now we are preparing it for the first quarter of the year. We have January, February, and then March. So we have February purchases. How are we going to ascertain February purchases? We said 80% of the sales for the month, and then we will pay it in the month before sales. So we have 80% of the sales, that is December sales. Now 80% of that, then we are paying it in what? January. So we have March purchases, which will go to February, 80% of the sales. 80% of 2,000 for March, which will go to February. Then we have April purchase, 80%, which will go to March. Then we find the total is just one entry, so the total is 14,560. For February we have 16,000, and then for March we have 17,280 for the payment schedule. Now we have our sale of assets. Before we go to our cash budget, we are looking at all the workings. We said it will be valued at 20,000, but will be sold at a loss of 2,000. Sorry.
We are lessing the 2,000 means there will be what? A depreciation of 2,000. And as we said, depreciation and bad debts are what? Non-cash items. So we don't treat it in cash budget. We subtract the 2,000 from the 20,000, giving us what? 18,000 as the value of the asset instead of the 20,000. Now let's look at our cash budget for Lilo Enterprise. Don't forget to always state the organization or firm you are preparing the budgets for, the budget period. Now we have our receipts. Under the receipt, we know there was a credit sales of which we are supposed to receive a month after the month of sales. So December sales will be received in January. January sales will be received in February. February sales will be received in March. So it goes on like that. So we have debtors. So the 14,500 is the sales for December. Once you have your details down, I hope you can follow through. The 14,500 is the sales from December, which is supposed to be received in the month after sales. So the month after December is January. So we are receiving the 14,500 in January. Then we have the rent. As I made mention, this time we are receiving the rent. So it's what? An item of receipt. Money is coming into the business. So we enter that, and that was 2,000 to be received. Then we look at the dividend. The dividend too was being received. But it wasn't received in January, so we are going to enter it in the month they stated we are supposed to receive the dividend. So we put dash in January. In January, we are not receiving any dividend. Then we have sale of assets. The sale of assets too, they gave us the particular month we are supposed to make that sales and the amount we are supposed to receive from it. So in January, we still put what? A dash there. Because they stated the month the sales will take place, not in January, not in February. So when we get to March, we enter the figure there. Then we go to payment. With the total of the two, we need to put it there to know the total receipts for January. So we have here 16,500. Sorry. So we go to the payment items. We have creditors. Creditors, as we prepare the schedule, we know how much we are paying in January. This time we are not receiving, we are paying to our suppliers. So in January we are paying an amount of 14,560. Then we have the wages, which we are also paying to our workers, which is 5,000. We have our expenses for January, which is also 2,500. So we sum it up to determine our total payments. Now that is the creditors plus the wages, and then the expenses to give us the total payment. We have our total pament as 22,060. Now we want to ascertain the net cash flow as the question stated. Show the net cash flow, and that is our receipt less our payment. We want to know our inflows after all those payments have been made. So we less the payment of 22,060 from the 16,500, giving us a net cash flow of 5,560. This means that our expenses or our payments so far has been more than our inflow. Whatever came into the business within January was lesser than the payment we made. So we are having a loss of 5,560. Now what is our opening balance? We have our opening balance from December as 8,500. We add the two to ascertain what our closing stock. So we add 5,560 negative plus our opening balance of 8,500, giving us a closing balance of 2,940. So by the end of January, the amount the organization is having in their covers is what? 2,940. Now let's look at February. What was the debtors figure for February? We have 16,800. Did we receive rent in February? Yes, we received rent because the rent was per each month 2,000. So it's going to run through 2,000 for the 3 months. Then dividend was received in February, and that was 4,000. So we are only receiving dividend in. We didn't receive any dividend in January, but we are receiving dividend in what? February. So you take note of the month in which all the amounts are being received. If it's for February, you don't enter it in March or January. So you take note of the timing. Now we have sale of assets. The question told us that it's being sold in March. So in February, we still don't put anything in February. Now we have the total for receipts as 22,800. Now we look at our payment. Creditors for February, we have 16,000, and the wages and expenses is the same for all the 3 months. So we still have 5,000 for February, and then 2,500 also as expenses for February. We sum it up to ascertain the total payment, which is 23,500. Now what to be our net cash flow? That is our payments from our receipts, giving us a net cash flow of 700. It means we are still running at a deficit. We have our payment being more than our receipts even in February. So we have a loss of what? 700 cedis. What will be the opening balance? So we are going to move this closing balance as the opening balance for February. So we'll do that quickly. We have the opening balance being 2,940. As I said, the closing balance of 1 month becomes the opening balance of the subsequent month. We add the two and we ascertain a closing balance for February as 2,240. I hope when you are left to complete this question, you'll be able to enter for March. But let's look at that briefly. Then we look at our question of the day. So we have our debtor for March. The amount received from debtor as 18,200, and then rent received is what? 2,000. As I said, the rent was 2,000 for each month. Then there is no dividend being received in March because the dividend was only concentrated in what? February. So we put a dash there for the dividend. Now sale of assets. As I made mention, the value of the asset. The value of the asset was 20,000, but it will be sold at a loss of 2,000. So if there was a loss of 2,000, means it has lose its value, and now is what? 18,000. There has been a depreciation of what? 2,000, and depreciation are what? On non-cash items. We don't bring it to our cash budget. So we only enter the 18,000 instead of the value of 20,000 because it has lost the value of 2,000. We cannot get the total amount of 20,000. So we enter the sale of assets, which will be incurred in what? March. Will be received in March. We are selling the item in March. So we have 18,000 as the value for the sale of the assets. So we have a total for the payment as 38,200. Now our payment, we have creditors for March as 17,280. As I said, wages and expenses is still constant. We have 5,000 for wages for March, and then 2,500 also for March. Now our total payment is 24,780. what will be the net cash flow? We still less our payment from our receipt, giving us a net cash flow for March as 13,420. This means that our inflows are more than the outflows. As you can see, the net cash flow is a positive figure. Now we add our opening balance. The closing stock here for February becomes the opening stock for March. So we have our opening stock for March as 2,240. We add it to the net cash flow to ascertain our closing stock, and that will give us a closing stock for March as 15,660. So for our 2020 WASI question, this will be our marking scheme. What your examiner expects you to do. So anytime you meet a cash budget question, especially with the receipts and payments, take note of the timing, and that will help you, because most of the items of receipts and payments may be given to you straightforward, but with the credit sales and credit purchases, you take note of the timing that has been given for payment and receipt to be made. So we will look at our question of the day, and then when you have your solution, you can call in to submit your solution. You can join us live on 0302 211 705. 0302 211 705 or 0302 211 706. Let's look at our question of the day. Okay, so I read the question of the day. Use the data below to answer the following questions. Use the data below to answer the following questions. So we have two different months, May and June. Cash sales for May is 45,000, and then cash sale for June is 50,000. We have credit sales at 60,000 and then 70,000 respectively, both for May and June. Cash purchases is 20,000 and then 20,000 also for June. We have credit purchases 30,000 for May and then 40,000 for June. Cash discount allowed is 5%. You take note of that. Cash discount is 5%. All credit purchases and sales are settled the following month. All credit purchases and sales are settled the following month. Your requirement is I or 1. What is the cash receipt for June? The first question is, what is the cash receipt for June? 2. What is the cash payment for June? What is the cash payment for June? And 3. What is the total discount allowed for both May and June? I'll take the questions again. Your requirement. What is the cash payment? What is the cash receipt for June? 2. What is the cash payment for June? And 3. What is the total discount allowed for May and June? The questions will remain on the screen for just a moment, and when you are ready with your solution, you can call in and give us your shot. topic of the day solution is readily here. So I'll help you out with our solution. So the first question asks us to determine the cash receipt for June. Now we've been given a cash discount. We want to know the total receipts in June. How much are we going to receive in June? We made a cash sales in June which attracted a 5% discount. And then don't forget that May credit sales will also be received in June, because they said all credit purchases and sales are paid in the following month per our question. So if all credit purchases and sales are paid or settled in the following month, then it means May credit sales will be received in June. So we have May credit sales, which is 60,000. It will be received in June. So we have the 60,000 down. Then the cash sales in June, which attracted a 5% discount. Because there is a discount, the credit sales will calculate the 5% and subtract it from the total credit sales we made in June. And then we add the difference to our May's credit sales to ascertain the amount we are going to receive in June. So we have June cash sales as what? 50,000. Then the 5% discount it attracted was 2,500. We less the discount from the 50,000. Which is 47,500, and then we add the two to ascertain the total. Before we continue, we go on a quick break and then we continue with the problem of the day. Stay. right, so as displayed on your screens, we have the May credit sales of 60,000 and then the June cash sales of 50,000, which attracted a 5% discount. This time it wasn't a discount given to the credit sales. Sometimes you may receive a question where you get a discount for your credit sales or credit purchases. This time the discount given was for the cash payment or cash settlement. So because there was a cash sales in June of 50,000, it attracted a 5% cash discount. We want to know the total receipt we are going to receive in June. So we have the June cash sales, which attract 5%. We are subtracting the 5% of 2,500 from the 50,000. So the total we are supposed to pay by June is 47,500 instead of the 50,000. It's just like you entering any shop. They say they are running sales. When you pay, you buy and you pay outright, we are going to give you a discount. So once there is a cash sales, it attracted a cash discount. So you noted there is what? A cash discount of 5%. So we calculate the 5% discount on the 50,000, and that will give us 2,500. So we subtract the 2,500 from the cash sales of 50,000, and that will give us the 47,500. So the total cash receipt from June is the May credit sales and then the June cash sales, of which we have taken care of the 5% discount. So giving us a total of 107,500 cedis as the total receipt for June. Let's look at the total payment for June. The total payments for June also, we have the May credit purchase, which is also supposed to be paid the following month. So May credit purchase is 30,000. It's supposed to be paid the following month, and then the following month after May is what? June. So we are paying the May credit purchase in June. We are looking at what? The total cash payment for June. So the credit purchase for May will be paid in June, because the question made mention of what? It being paid in the following month. So May credit purchase will be paid in June. That is the 30,000. Then the June itself, the cash sales, because the June credit sales will also be paid in the month following June, which is July. But we have to cater for what? The cash purchase in July. So we have the cash purchase. Okay, hello. We have the cash purchase. Okay, hello. Kindly lower your TV set so that I can get you. Hello. Kindly lower your TV set so that I can get you. Hello.
Hello.
Good evening.
My name is Joshua and I'm calling from Delhi.
Joshua, and you're calling from where? Okay. Joshua, what's your question or contribution? Can you lower your TV set so that we can get you?
Please, can you hear me now?
I'm saying, can you lower your TV set so that we can get to you? All right. So we're looking at the question of the day solution. We have the cash payment for June, as I was saying. The May credit purchase is 30,000, which is supposed to be paid in June. That is the month following May. Then we have the July cash purchase. We are looking at the payment. So the cash purchase was 20,000. We want to know the total payment we are supposed to make in June. So the credit sales from May and then the cash purchase itself in June. We sum the two up and that will give us a total of 50,000 for the cash payments for June. And then the last question for our question for the day was asking us for the total discount for both May and then June. The total discount allowed for both May and June. And as the question stated, the discount was on what? The cash sales. So we are going to look at the discount, 5% discount on the May cash sales and then the 5% on the June cash sale, because it's asking for both months. So we have 5% cash discount for May. That is the May sales of 45,000 multiplied by 5%, giving us 2,250. And then 5% cash discount also for June, and June cash sales was 50,000, giving us 2,500. So the total discount allowed for May and June is a summation of the two. We have 2,250 and then 2,500, giving us 4,750 as our total discount allowed for both May and June. So to my students, hello.
Hello. Yeah.
Good evening. Your name once again?
My name is Joshua.
Okay, Joshua, you're welcome back. Your question.
I want to ask, in the situation where the discount is calculated on the credit purchases, are we following the same procedure?
Yes. If it's on the credit, it means you have to focus on the credit purchase. I made mention that once they have stated it's on the credit purchase or credit sales, you have to focus on that, because sometimes you can make sales and then you tell your debtors they are supposed to pay the next month, but when they pay, it will attract a discount. So it means the discount will be on the credit sales. But this time for our question of the day, the question stated a 5% cash discount. It means the discount is going to be calculated on the cash sales, not the credit sales.
Okay.
All right.
Another question.
All right.
In the first illustration, we calculated the closing balance for March, which will be the opening balance for April.
Yes.
We were asked to prepare the cash budget for the second quarter. Are we using the same figure, or will we do some calculations as we did first?
No. Once you have calculated the closing stock for March, it means that same closing stock will be used in the second quarter when you are preparing for April. So opening balance for April will be the closing balance for March. You're welcome, Joshua. All right, so that will be our total discount allowed for June, which is the 4,750. We will bring our lesson to a close for today. I hope you have learned something new, and then how to tackle your cash questions in the exam hall when you are supposed to prepare a cash budget. The main thing you are supposed to focus on is the timeline given for the receipt and payment. Don't forget that. When you get that right, all other items, once you know is a receipt items, you just enter that, and once you know is a payment item, you just enter that. So for all my students out there, stay connected to Joy Learning Channel. Until then, we'll meet once again in our next episode. My name is Madam Judith, and I have remained your course accounting tutor for the night. Enjoy your evening.